Welcome to this week's market drama. We'll begin with the S&P 500, which was down 1% for the week. It is still up 1.2% for the year. NASDAQ was down even more, down 3.5%. It is now down 2.4% for the year. Worth noting that MSCI EFA, which is essentially internationally stocks X emerging markets, are still up 8% for the year, right? So we're starting to see international stocks outperform so far this year domestic stocks. So what's happening here in the US that's driving the sell-off? For the most part, it is the technology sector, specifically the Magnificent Seven, that have led the way up, that are experiencing a pretty big correction, right? So over the past 2 years, those seven stocks have driven more than 50% of the index gains. However, this year, that group has shifted from being the leader to the laggard, right? They've actually, in fact, are in correction territory already. So specifically to this past week, what drove the further sell-off is NVIDIA reported earnings on Thursday. They actually beat expectations, yet the stock pulled back 8.5% following the release of earnings and guidance. So it just shows how high the bar was of expectations, that even when they beat what they said they were going to do, the stock still sold off. And I think that's the broader sentiment overall, not just for tech stocks. When you look at economic data, yes, we've had a soft patch of economic data. January retail sales declined more than expected. PMI, which is a measure of business activity, did worse than expected. Initial jobless claims have risen more than was expected in the last couple of weeks. So all of those things have led, for instance, to the Citi Economic Surprise Index to fall over the last 4 or 5 weeks, but from very high levels, right? So yes, we are seeing a soft patch. Yes, expectations were maybe too high for some of these tech stocks, and they're now kind of correcting. But the overall story here, though, is that when you look at earnings, which ultimately drive the markets in the long run, for the full year 2025 estimates, they're still pointing to double-digit growth this year. And outside of technology, you're actually seeing the rest of other sectors perform really well when it comes to earnings, right? So if the economy holds up and we're just seeing a soft patch, and if, call it, geopolitical policy doesn't drastically change, market should be able to kind of digest this. Keeping that in mind, part of the reason the market did sell off this past week outside of the NVIDIA earnings is that President Trump said the Canada and Mexico tariffs are on track to go into effect on March 4th, along with the 10% tax on Chinese imports. Right, so that's still not fully baked when it comes to individual stocks earnings estimates for this year. If that does go into effect, you could see further revisions to earnings come down for the broader S&P 500 and the broader markets overall. So we'll have to keep an eye on that, as that's still very much a headline, but that now is going to start becoming actually reality and implemented. Outside of that, next week we have payrolls on Friday. That will give us an indication of how the job picture is holding up, and if it kind of counters some of the more negative numbers or worse than expected numbers like retail sales, PMI numbers that we saw in prior weeks. That is it for this week. Stay tuned for next week.